Hello guys, welcome back to the channel. This is Hassan, your boy, and today we are going to be learning about top-down analysis. That is my own strategy that I use for trading, top-down analysis and supply and demand. So someone will ask, those are two strategies that you want to use. So which one are we going to be considering? Well, top-down analysis just helps you to show you where the market is going, and then supply and demand, I only use it for entries. Why do I use supply and demand for entries? It's because supply and demand gives you precise and sniper entries sometimes. And why do I like sniper entries? You should also be liking sniper entries because you have a small account. So that means you don't want your stop loss to be big or huge. You want your stop loss to be small. So in that aspect, you're going to be using supply and demand in order to get your stop losses. And I'll show you how it is done. So what do we have on the screen? On the screen we have your GBP and okay guys, first subscribe to the channel. We are on the road to 200 subscribers. We reached 100. Subscribe to the channel such that you can be part of this wonderful growing community of smart traders. So subscribe to the channel and then we shall continue with our video. As usual, I'll give you only 5 seconds to click the subscribe button and then we proceed. So guys, subscribe. Okay, so I hope you have subscribed to the channel. So now let's proceed. So on the screen you have Euro GBP, and someone will say that what do you mean by top-down analysis and you're on the weekly time frame? Basically, whenever I talk about top-down analysis, people think that you're supposed to start from the monthly time frame as you go down. I think that idea is mainly because of the people who started publicizing top-down analysis, especially on our continent. They mostly start from the monthly, but my own, I start from the weekly, then I go down to the daily, 4 hour, 4 hour, 3 hour, as you see them here, 4 hour, 3 hour, 2 hour, 1 hour, 30 minutes rarely, but I just keep it there. So this is where I find my entries: 4 hour, 3 hour, 1 hour, 2 hour. So 4 hour, this one is for analysis, this one is for analysis, and then 4 hour is for small analysis and entries. These ones are purely for entries, and I'll show you how they work. Okay, so now top-down analysis simply means that you go from the higher time frame to the lower time frame. So any high time frame can be any time frame above the other. You can do top-down analysis from the 1 hour, 30 minutes, 15, and execute on the 5 minutes. Any hour that is above the other hour, you can help you do top-down analysis. There are some people who start from the 4 hour and then 2 hour and then execute on the 30 minute or 1 hour. So anything that you're coming from top to bottom, that is qualifies to be called top-down analysis. So in our case, we start from the weekly. There are people who start from the monthly, weekly, daily, and they're supposed to execute on the daily or the 4 hour, which is also okay. So for me, I start from the weekly, daily, 4 hour, and then these are the lower time frames for execution. And execution, I use supply and demand. So now, why do I start from the weekly and not the monthly? It's because I do not have okay, I have the patience. I can hold a trade for more than a month, but then if I start from the monthly, that means I can hold trades for 1, 2, 3, or 4 months if it is required. I don't need to go there. I want to be in the market for a maximum 2-3 weeks or 1 month. Okay, maximum 1 month, and then I come out. If something is not happening for that 1 month, I don't want to be in because I'm not a position trader. I do not have a lot of money that I'm going to hold the trade for years, for a full year. Nope. That's why I come from the weekly. So I just look at excuse me, it is too cold here. So just look at how the weekly chart is, and then make my quick analysis to give me the direction on the high time frame. And I got a daily to see approximity, then on the 4-hour, and then that's where I apply supply and demand to see where we are heading. So let's go straight to the chart after that brief introduction. So this is the weekly time frame, and this is 0 GBP. So what do you see on the weekly time frame? You see, if I could start from here, price was going up, making high highs and high lows. So now when it came here, made a mini high and a low, a high, came here to this low, bought again. After this coming to this land, buying again. The next time it came, it broke down. After breaking down, price came to retest this area, and during this retest, it gave you a QM pattern. This is high high, higher low, higher high, higher low, higher high, and then lower low with a strong bearish impulse creating a lower low. This is a QM pattern. This is high low, high low, high, lower low. So this is a QM pattern creating a strong bearish impulse. So what happens is, this is your supply zone here, and this is the weekly. But remember, we don't trade on the weekly. So this was just a confirmation that the retest is done, so we are heading down. We dropped down up to this previous support. We ranged on this support for around 2 months, and then broke up, breaking this previous lower high. We broke up, came back to retest this support again, but we did not have the energy so to break it, so we went up, created some support there, creating a head and shoulder, and then shot up. Let me show you. This is a shoulder, this is a head, this is another shoulder, and then we shot up. So what is happening now is, during the period of shooting up, we created another demand zone here. I told you demand zone is simply a small area of consolidation before a big impulse. And where do we mark? How do we mark the demand zone? We mark the last candle before the impulse. And you see how price came, tapped into this demand zone with a sniper entry. I told you guys, this is why I use demand and supply, is that you are able to know where the price might turn back from and head to another direction with demand and supply. But if you don't have demand and supply, you want to be knowing. You'll be like, is price going to start here, or is it going to start from here? You get the point. So now price tapped in and went up. How many pips were you given on that price tapping in to the upside? Around 61. And now it is retracing. Looks like it is retracing back. So what do you think about this price action? This is 0 GBP, and I think what I see is that this is the weekly time frame. Price tapped in and tried to go back. However, the momentum was not that high. So I think price is going to come back, sit in this supply zone very well, which is going to create a clear left shoulder for this head here. And now we shall be going up. And if you look at it very well, we have another supply demand zone down here. Down here. This is what the people of supply and demand call the extreme demand. So you have two areas of demand zone. So it might just want to come and use this lows here as liquidity, tap into this extreme demand, and then we head to the upside. That is what I'm thinking price action is going to do on the weekly time frame. However, there is nothing we can do until price action reaches there, and then we react to what it is going to do. Remember, we do react, we do not predict. So we go to the daily time frame to see what is happening on the daily time frame. So on the daily time frame, the supply zone is still clear. However, we can refine it to a smaller zone such that we can get those tight stop loss. So if we refine it to a smaller zone, ignoring this week here, because there is no much price action in the week, we see that price did not tap in. If we refine it to a smaller zone, we see that price did not tap in. However, if we continue, we see that during this move here, price created another demand zone. If you consider the week, it was tapped in. If you consider the week, no, it was not tapped in. Yes, it was not tapped in, and price is coming back. So me, I rarely consider the wick the upside. I always consider the candle closure on the body, and then the wick the downside for the stop losses. So price is coming down, but I believe that I don't think that price is going to come tap here and go up. That can happen, but to me it is so unlikely. If you have learned demand and supply well, you will know that price always considers the extreme demand. So we have demand below this demand. There's a daily demand here, and then we have another. If we refine this, we have another weekly demand. This is also weekly, this is also weekly. So that means this demand and this one are very strong compared to this one. So I think price is just going to go through this demand and then tap into this one. If it taps it and sits here very well, I'll be waiting for confirmations on the lower time frame in order for me to buy. I'm not buying from this area without confirmations. If it just taps in and starts moving, let it go. But if it sits here well and gives me confirmation, I'm going to be entering from this area. However, what my ideal scenario would be, I would want this price action to come down here to this demand, extreme demand, because this is the last buying zone. You see, guys, why you should learn supply and demand. This is the last buying zone. Let me just refine it to 40 pips. This is the last buying zone. So if price breaches this area here and comes all the way here, you're going to get a sniper entry. You don't even need confirmations. The moment it reaches that area, you're getting a sniper entry, and we are buying all the way to the upside. And look at how many pips we have, around 300 pips. We are with a risk to reward of 1:8. You get my point, guys. So we are waiting for price to come and tap this area, and we go. However, price might not reach that area. So what do we expect? Price can come here and want to go up. So here we shall need confirmation entry. This demand zone are both valid. Why? They both break structure. This one breaks structure here to the upside with a huge move, creating this imbalance, and there's an indecision candle here. This one also breaks structure, breaks this structure, and breaks this one to the upside with a huge move, creating an imbalance with indecision candles here. So they are all valid, but we shall enter them with confirmations. Without confirmations, we are not entering. So we shall go to the 4 hour and see what is happening. We still have this demand zone on the 4 hour, and then when I come here on the daily, this one now it's not clear. We have a lot of indecision candles. What about this one? This one's also, it's not clear. So they're only clear on the daily. When I go to the 3 hour, do I see something? Nope. Even here there is this one, there is this one. Okay, so we shall first wait for price to reach there, and then we shall be buying Euro GBP. What are the buying zones? Don't buy from here. We are going to buy from here or from down here. That is Euro GBP. It can be this week or it can be next week, but we shall wait until price gets there. I sold on this bearish engulfing candle, but when I saw a retracement, I was like, oh, let me first pull out, because there's a QM pattern. You see, Euro GBP is confusing a little. That's why I'm so skeptical about it. There's a QM pattern here. There is low, high, lower, low, higher, high. That is a QM pattern. Low, high, lower, low, higher, high. QM pattern. So why do you buy from? When price comes around the demand zone here, we buy. So there is a demand zone here, valid for buys, and there is another demand zone here, valid for buys. So that is what is disturbing me. However, if you go to the daily, you'll see the same thing. There's another QM pattern on the daily. Yeah? There's another QM pattern on the daily. This is a low, lower low, higher high. So price came, but it did not reach this zone and then went up. So it has come back, tested this area, tried to go up, but there's no momentum. It is now looking down. So What do we think what is going to do? We'll only be interested in buys if price comes here and gives us confirmation. If it doesn't and breaches this area, we are interested in buys. Immediately price taps this zone, we are buying straight away. As long as price taps this zone, we are buying straight away. Remember guys, there are always going to be many opportunities. You do not want to lose your money on one opportunity because you feel like no, it is too like you just want to enter the market early now. So you don't want to lose your money in one opportunity. You want to wait. If this trade does not even come to test and it ends and goes up, just ignore it, guys. Ignore it and look for another opportunity. If it reaches here, we're looking for confirmation on the 30 minutes time frame. Confirmation entries, it is very simple, guys. It is something I told you now for buys, something like this, like that, like that. Lower low, lower high, lower low, higher high, something like that. So now when price comes back, where is it? When price comes back from here to around any demand zone that will be here, we shall be buying price to the upside. That is a confirmation entry that we shall be waiting here. As long as price stops here, we go to the 30 minutes now. Wait for confirmation entry looking to the upside, and then we shall be buying price to the upside. If it doesn't give us confirmation, we are waiting for it to tap in this extreme demand, and then we shall buy it aggressively. There we shall just know that this is the last area for buys. If this area is breached, then we are no longer in an uptrend. We have changed to a concrete downtrend. Okay guys, so I hope we are okay up to that area. So this is Euro GBP, and that has been the top-down analysis on Euro GBP with supply and demand for entries. So guys, top-down analysis gives me the direction of the market. It is clear on the direction of the market. With supply and demand, it gives me entries, sniper, good entries. I hope if you incorporate that in your trading, you're going to be okay. And I can give you something here. Our price was in a downtrend, it shot up, and then look at what is here. On the weekly time frame, we have a demand zone here, a supply zone here. So what happened is price came, tapped into the supply zone, which is on the resistance, supply zone on the resistance. So there is support and resistance here, and then so there is supply and demand. These are the trades that you want to enter full margin. Why? You're seeing support and resistance, this area. And then there is supply and demand. Let me go to the 30 minutes and I see whether it gave us a confirmation entries for the my guys who don't want to lose their money. Should go to confirmation. It was there, but it was not clear. It was there. It was clear. This is a higher high, a higher low, a higher high, a lower low. You remember the other thing I drew for you guys? The thing that goes like this. Let me use let's show you how I drew it. Like this, and then like this. So we buy when the price comes here, we buy from this area and then take it up. So it is the same thing even for the sales. Let me delete this one, I'll show you for the sales. Sales, it is like this: higher high, higher low, higher high, higher lower low, higher high, lower low. So when price comes around this area, we buy and take it down. But we don't just buy because price has come around this area. Remember I told you you buy from the left shoulder to the wick of the head. However, it is best when there is a demand zone, supply zone around that area. So this is what is playing, what is in play here. You have a higher high, higher low, higher high, lower low, and then there is a demand zone in that area. Let me show you the demand zone. This red candle here, there's a demand zone. This price does not touch the candle, but you can just enter. You put stop losses above, put above this wick here, because price cannot go up to here. If it goes up here, that means we have changed the trend, but there is a demand zone here. I'm sure if you got the 15-minute time frame, it is there, but I wouldn't want to go that low because 15-minute time frame is noisy. So this thing I've drawn here, let me extend it here and turn to the line chart. You see, this is a higher high, this is a higher high, this is a lower high. It is the same thing with this, a lower high. This is the head, this is head here. This is a lower low, this is a lower low here, and this is a lower high. This is a lower high, this is lower high here, or this one, or this one, any. And then price poured down. So the same thing, if you missed that one, there is this one here, higher high, higher low, higher high, lower low, and then it comes around here. Let me see if we have a demand zone. There's a demand zone here now. This one was, if you missed the other one, you caught this one. Put your stop losses above here. Price came, tapped in, and then dropped down. Try to go up, it did not have the momentum, dropped down drastically. So this one gave you a confirmation on a 30 minutes time frame. However, that's my point. My point is on the weekly and the risk to reward. Guys, you have to learn supply and demand. It is going to help you a lot. So we have a supply zone here which was tapped in, used before, but in the weekly you can use it up to 3 times. So when price comes back, we expect it to do what? To sell again. So your stop losses have to be slightly above here, knowing that if price comes back here, as long as it does not close above, we are safe. So the ideal situation for you would be if price comes here and starts rejecting, that is now we enter for. When we enter for sales and then hold. If you entered there, you held this trade for 1, 2, 3, 4, 5, 6, 7 weeks. That is 1 month and 3 weeks. And you'll be getting 318 pips. So if you entered a lot size of 0.1, you'll be getting $300. If you enter a lot size of 1, you'll be getting $3,000 for that trade. And where were you targeting? And that's why I told you guys, supply and demand is good. So you entered from here, from supply, and where are you targeting? You're targeting the demand down here. You knew price would come and reach down here, so your role was to wait for price action to reach down there. Just trail your trades until when you reach down here. When you reach down here, that should be your TP. You're going to eat your money. Okay guys, so that was Euro GBP on the weekly time frame. I just wanted to show you how it went down. So I'll be doing more videos like this because now this is my own strategy. This is a strategy I used to trade, and there is a refining that I've done. I'll be showing you in the next subsequent videos, so stay tuned and subscribe to the channel, guys. Subscribe to the channel because I keep on sending videos every day. I don't miss. Every day at least I give you one video. So subscribe to the channel, and if you've learned something from the video, also like the video and share with your colleagues. So that is all for today, guys, and let's meet in another video. Bye.